I think if we're all right, Marty, go ahead and get started.
Sounds good.
Well, good morning, everyone. Thank you all for jumping on the webinar today. Hope you're all having a great Tuesday morning. I'm Caleb Bauer, I'm Executive Director of the Department of Community Investment with the City of South Bend. I see a lot of familiar names on the list here and excited to have you join us today to walk through a webinar about the Opportunity Fund request for proposals that was published by our department earlier in the last few weeks. And we're seeking proposals from lenders and business coaching experts to assist us in operating what we're calling the City of South Bend Opportunity Fund, which is a loan program to assist small businesses. So I'll give a quick overview, then I'll turn it over to members of our team to get into more of the details. We'll do about a 25-minute presentation, and then the rest of the hour will be held for your questions as it relates to the RFP. So if you can hold questions till the end, and then we'll have plenty of time for Q&A. So an overview of the goals of the Opportunity Fund. Really, it's part of the city's desire to facilitate lending to small businesses that lack access to traditional loans. Some of you may be familiar with a couple programs that are run by our team through our Growth and Opportunity team, which are revolving loan products. One of them is formerly called the Industrial Revolving Loan Portfolio, and then one was a COVID-related EDA grant program that's still an EDA program called the Recovery Revolving Loan Program. Those are great programs and have been very successful, but the minimum loan amount for those is $50,000, which is great for many small businesses. But we have realized that there are other businesses that are not ready to take on that level of financing. And that's where we're looking at the Opportunity Fund to help fill in that gap at those lower loan amounts. It's designed to be exclusive and expansive by enabling a wide range of businesses to scale up and be financially successful. And really the goal is not only providing financing, what may be the first financing for a small business, but also providing coaching and assistance to help those businesses grow in a healthy and scalable way. We can go to the next slide. So like I said, facilitating growth, providing business support, resources, and financial opportunities. The goal of the fund is providing low interest loans to qualifying small businesses that otherwise wouldn't be able to access financing. Maybe they don't have a credit history that would put them in a good position to go to a traditional financial institution. We want to be able to take on what may be a little bit higher risk of a loan portfolio, but with a partner, our goal is using city funds to help mitigate that risk and really make this an additive program for everyone involved. And then provide or refer applicants to a small business coaching program to increase the likelihood of their success. So not just providing that financing, but really providing the support that's necessary for that financing to be successful. I'll turn it over now to Mark Biemendorfer from our Growth and Opportunity team. Mark, if you want to give a little bit of information. A lot of the people on this call may be familiar, but information about why this is important for our community at this time.
Yeah, absolutely. And can everyone hear me?
Yes.
All right, thank you. As a few of the people on this call know me, but my name is Mark Biemendorfer, and I'm a manager of business development within the Department of Community Investment. I manage the city's revolving loan funds, and I'm involved with other programs designed for business support. The following slides help to kind of illustrate the need for programs such as the Opportunity Fund, especially in the years following 2020. So as everyone on this call likely knows, and it almost goes without saying, but businesses were pretty heavily impacted by COVID. The Federal Reserve Bank of Cleveland released a report following COVID, which looked into whether businesses were seeking financing, and if not, the reasons why credit was not pursued. So what the report found was that businesses were less likely to seek credit now than just a few years ago. So this slide reports a decrease of almost 10% from participating businesses over 2016 to 2021 for businesses opting to not pursue credit, with a pronounced drop following 2020. So, yep, thank you. Of the businesses polled for this report, 66% did not pursue credit for various reasons. However, more than half of those needed funds but chose not to apply. So reasons for this kind of varied, but roughly a quarter of those businesses were simply debt adverse. Well, makes sense. However, 14% reported being discouraged from seeking financing. So next slide, please. Thank you. Those discouraged from applying cited their own reasons, such as they felt that they had weak business financials, the lender requirements were too strict, that businesses or that their business was not one a lender would traditionally lend funds to, that they previously denied credit, or, well, that they were simply missing documentation. Now, the reasons cited should be fairly understandable for everyone attending. However, business owners should feel that resources are available to them, resources which are appropriate for the stage the business is operating in, despite any negative prior experiences. If a loan makes fiscal sense for a business to help them scale and to further develop their business, then there should be resources available to assist them in this. If coaching would assist that business in becoming more lendable, then, well, they should have access to coaches. So slide 8, please. This leads to the goals of the Opportunity Fund, which is to provide loans at below market rates for businesses operating within the city of South Bend. So to that end, we have a target of around 5% for the interest rate. And to get there, the expectation is that the city funds will be used to fund a loan loss reserve account to offset some of the lender risk. Now, to clarify, we do expect that some of the lending risk be shared. Of course, different lenders will have different capacities and expenses to account for. So precisely how risk is shared is open-ended and should be reflected in the submitted proposals. Now, pivoting back to the slide, coaching will play an essential role in helping some businesses become prepared to take on a loan. So coaching is due to this, coaching is a core tenet of the program, with professional one-on-one coaching expected as a free service. As I mentioned earlier, coaching should be relevant for the stage in which the business operates. So tracking the outcomes of the coaching will also be required under the Opportunity Fund program. For loan applicants, we expect a coordinated approach to providing support. This means that there is a preference for the coaching and lending to be under the same entity. However, we know of many lenders who partner with outside organizations for coaching, so it's not a requirement. We also ask that respondents place an emphasis on sustainability and won't put some thought to balancing the credit risk, while also providing access to small businesses who may not traditionally qualify for credit through conventional lenders. Slide 10, please. To reiterate, our fee respondents should propose a program plan which details the type and services of the business coaching, as well as how the loan fund will operate. If your organization is only experienced in lending or coaching, we encourage you to form partnerships to provide a more robust level of support. So overall, the proposal should focus on 3 main areas, being lending, coaching, and community outreach. So with that said, I'll be handing off to my coworker, Elizabeth Mayorga, to talk about those specific roles and responsibilities under the RFP.
Good morning, everybody. My name is Lisa Mayorga, and I'm a business development specialist within the community investment. So today I would like to talk about the responsibilities of the lender. The lender will be designing and implementing the Opportunity Fund lending program in partnership with the city, review the loan request by small businesses applicant to approve, deny, as well as to work with the applicant to modify any requests when appropriate or as needed. Own management function of the Opportunity Fund lending program, including not limited to underwriting appropriate loan collateral, and also making sure the loan is secured by guarantors, managing the loan collection and repayment. And also, the lender will be responsible to adhere to any legal requirements regarding to the Reg B and the fair lending regulations, and also adhere to reporting requirements determined by the city in relations to administering the Opportunity Fund program. Responsibilities of the business coaching. The business coach must provide small business coaching, receiving the loans through the Opportunity Fund, also provide coaching to businesses that do not qualify for a loan through the Opportunity Fund, but have potential to qualify in the future. So this can be, for example, there's business owners that might not be ready to qualify for the loan, but we need that one-on-one or that we have to coach our businesses. And this is where the business coach would help provide those services. And they can be online, like virtually or in person. Coach Opportunity Fund applicants, and among other things, talk about business formation, developing financial literacy, and any steps to help improve their business credit profile. The business coach will customize coaching sessions that will meet the businesses where they are, providing training that is relevant to the current stage the business is in. And this may include virtual meetings, like I mentioned before, or and also we would like to, when possible, in-person sessions as well. Next slide, please. Responsibilities of the City of South Bend. We will provide program oversight to ensure the program aligns with the goals of the city, conduct evaluations, formal reviews of the selected partners in relation to administering the Opportunity Fund, implement programs, process improvements or modification as needed in coordination with the selected partners. We will also provide feedback to the Opportunity Fund selected partners on the loan applications. So we would like, as we partner with a lender, we would like to provide some feedback, see how the loan applications are going. And we would like to provide some input just in case maybe there might be a applicant that might be close to an approval, but it's not there yet, and we can provide some feedback there. Also, we're going to help with conducting some marketing outreach and effort separately in conjunction with selected partners to promote the program. We will all work as a team to promote the program, and also provide referrals to small businesses program. Like Mark mentioned before, we manage the revolving loan fund. So if they're not ready there, we would like to take this opportunity to refer an applicant to the Opportunity Fund program. And also assist partners in taking the process and continued communication with the small business owner. If the lender is not, or the business coach is not within South Bend or is in South Bend, we would like to collaborate and make those connections where if you're unable to meet with the customer in person, we are here to help as well to meet in person. And marketing and community outreach. So we can conduct marketing and outreach efforts separately and in conjunction with the city to promote the Opportunity Fund. We'll be working with the city and community organization to recruit business to participate in the Opportunity Fund, and also ensure that marketing and outreach efforts are targeted to small businesses, focus on those in underserved communities and those that lack access to traditional sources of capital, including minority-owned businesses. Just like Mark mentioned before in our presentation, there have been several applicants in 21 and 22 that were unable to apply or were discouraged on applying. So we would like to help out with Opportunity Fund, help the underserved communities so they can apply and have an opportunity with this program. And also collaborate with the city on the Opportunity Fund website. And I would like to take it over to Mark.
Thank you, Lisa. So for these slides, well, this one in particular, pretty important dates. Now, this is being recorded, should be available later, but now would be a time to take a screenshot, take down some notes if you want, since some of these dates are going to be coming up pretty fast. Today, of course, is the webinar for the RFP. We expect anyone that's interested in a potential partnership, if you don't have anyone already identified, please reach out to us by the 19th at 11:59 p.m. So that way we can kind of help make any matches between any potential lenders or coaches. Now, for May 14th, thank you, sir. May 14th, so all RFP respondent questions should be due to the city at the website listed. On May 21st, the RFP submission is due by 11:59 p.m. Now, we have a target of selecting the organization sometime in June or July, with a contract being signed towards the end of summer, and hopefully be up and running in the fall of this year. Now, this will be the criteria in which we base our decision on any of the proposals submitted. 35 points will go towards the proposed program design. 25 points will go towards experience in small business loans, micro lending, and coaching. 20 points will be dedicated for organizational capability. 15 points for experience and committee engagement, and 5 points for any unique features of the organization. So for submitting the applications, the ideal RFP respondent will demonstrate a comprehensive approach to successfully operating the Opportunity Fund, organizational and financial capacity to operate the Opportunity Fund, a thorough understanding of the program responsibilities and parameters, demonstrated expertise in financial lending and or coaching, depending on what your specific role it will be, financial counseling, lending, coaching, business assistance, programming, etc. And then excellent proven strategies and dedication to community engagement and outreach. So the funding kind of breakdown, of course, we built some flexibility into the proposal, but RFP respondents are expected to use their own funds when issuing loans. RFP respondents are required to submit a detailed budget in their proposals, including the plan to apply the loan interest income with sustainability in mind. Loan interest income should be reinvested to that end to grow the funds available to lend, while also offsetting potential losses, unless the applicant can describe a more appropriate use for this income. Eligible uses of program funds include facilitating small business lending through risk mitigation, providing business coaching, marketing the small business support, and covering admin expenses and overhead. So to kind of wrap up, the expectation is that through this the RFP, the respondents will enter a partnership, or the selected respondent will enter a partnership with the city to implement the Opportunity Fund programming and services. The selected organization will serve as the lender and provide business coaching, either directly or through a partner as provider of the Opportunity Fund. To help service this, the contract is worth $1 million for 3 years of operations, with a maximum of $500,000 to be provided the first year of the program. And there'll be marketing and outreach efforts conducted separately and in conjunction with the city to promote the Opportunity Fund program. Which I believe this brings us to the end of the webinar today. Wanted to leave plenty of time for questions. So I guess we'll open up there.
Hi, everyone. Eric Glavich, Director of Growth and Opportunity within the Department of Community Investment. I just want to relay my thanks for everyone for joining this webinar, and please ask questions. One of the important pieces of this RFP is identifying a partner, really someone who can work with the city and provide access to financing and business coaching for South Bend businesses, particularly those in underserved communities. So we really are, if Mark were to go back one slide, or, that first bullet, mentions the word partnership. And I think that that's very important. So I would encourage you to reach out, if you need to find an additional organization that could help with, let's say, business coaching, please reach out to us. We can make connections. We can talk through, kind of what the city's expectations are for this. And really, we don't want to discourage people from responding to the RFP because we're willing to work with organizations. So I'll leave it at that, and we can open it up to questions.
And there's some questions in the chat right now. It looks like Ryan Bell posted about startups. Yes, the expectation is that startups will be eligible. We really want to make sure that this fund encompasses the footprint of all the businesses within the city of South Bend, particularly focusing on traditionally underserved communities, which include startups. So that should be part of the proposal. As far as how many organizations will be selected, it really depends on the proposal. Ideally, we would select one organization that is able to provide both lending and coaching. However, in the case where there might be a partnership that works out pretty well, we would select that partnership. However, any funds being distributed would be going towards the lead in the partnership, whoever the primary organization is. Let's see, question about proof of partnership. I'd assume for the proposal that the intent to partner would be there's the intent or the as long as kind of the partners are identified and firmly established by the time the proposal would be accepted, then that would be acceptable, I believe.
I would agree. Just to touch upon that point, this goes back to the partnership with the city. The city wants to make sure that, this program is serving the intended target audience, which is, South Bend small businesses, people who traditionally don't have access to capital, and in addition might need coaching. So, if, the intent to partner is very important because the city would be happy to work with you in making connections. Question, are there any target industries? No, I mean, it's open to all South Bend businesses. So really it's not going to be specific to any particular industry. Would ITIN clients be eligible for this program? Does anyone else from the city have an answer to that?
Let's see. I believe that they would be eligible under the program. Once again, we want to try to be inclusive with this program with a focus on underserved communities or traditionally underserved communities. So if they're unable to get like a social security number, it matters more that I would say that we might need to kind of review this a little bit and follow up on the FAQs on this one. But conceptually, I think that the emphasis would be that the business is formally, officially formed and all the paperwork's in place there for eligibility.
Yeah, I think that this gets to the business coaching side of it. So if, for example, an applicant, a business for the Opportunity Fund is not in a position where, they can either, apply for a loan or they're just not in a position on the business sense to receive a loan approval, they will go through the business coaching. And the city would work with the partner organization to make sure that that business is going through the coaching that's appropriate to the level. So if they haven't even created an LLC yet, then we would work with the partner organization to ensure that that business is getting the coaching. I think the term is coaching, business coaching to meet their needs. On the flip side, if you have a business who's fairly advanced, they know exactly what they're doing, they're not going to need that hand holding. They may only need, certain check-ins to make sure that, everything's okay. And that's the appropriate level of business coaching for them. So,
looks like we have a few more questions that came through. As far as specific goals, outcomes for the underserved communities, we don't have stated targets in the RFP itself. That would be something that would kind of suss out as we do kind of the collaboration, kind of part of the review process. But no, nothing stated at this time. Or any other targets for loan terms? We don't have them written into the RFP, but we would kind of default to kind of some of the standard lending practices there. If it's for working capital, obviously it'd be a shorter term loan. If it's tied to equipment or real estate, it'd be longer terms in place. But we don't have anything to we didn't prescribe any terms. We wanted to see kind of what was brought to the table in the proposals and kind of go from there.
And then to add to that, the city's objective in terms of lowering the interest rate is, that's an element where we are supporting underserved communities, for example. It's really daunting if someone were to go get a loan and are told that they're looking at 9% interest rates. So part of this program and going through this program is providing access to a lower interest rate.
As far as the cadence of reporting that's in the RFP, I'm drawing a blank on hand, unfortunately. Let me see if I can pull that information real fast, but we can also address that in the FAQs. I believe that it was going to be more frequent the first year just because the kind of the newness of the program, but then the intent there would be kind of step down the reporting in years 2 and 3.
Artie, do you happen to have the reporting requirement handy?
Yes, sorry, I was just looking it up. The city will conduct quarterly formal reviews during the first year operations and then biannual formal reviews during subsequent years. So those years 2 and 3. I think the intention there is just right in that first year to help and make sure that the program's up and running, doing quarterly reviews, then moving to biannual.
Are there other questions? Feel free to unmute yourself and ask directly or type into the chat. Seeing none, if you are not viewing the chat, we will post this. Oh, we just got a question. Is expectation that all of these loans will be unsecured?
No, the expectation there is that, well, it depends on what is being financed precisely. If it ends up, someone wants to buy like a truck to kind of move around their equipment or cleaning supplies, what have you, then it's the expectation that a lien would be put on the title for that truck. Now, working capital is obviously a little bit hazier since typically working capital is unsecured. Now, the expectation there is that there'll be efforts made to form some kind of collateral or security for the loan. But in those cases, it is understood that there may not be sufficient collateral in place, and that's also acceptable. Just kind of has to be reviewed on a case-by-case basis, I would say.
And that would be where the partnership with the city comes in. So, we would work with the partner in identifying, what would need to be done to satisfy certain conditions to provide comfort for providing a loan that would be unsecured. So again, just kind of reiterating the point that the city's involvement will be a true partnership.
And in the interest of serving the underserved communities, I anticipate that there will be a number of loans that are unsecured, and that's perfectly acceptable. But do please speak to those scenarios and the RFP. Kind of let us know the thought process behind, kind of the approach there.
Mark, there's another question. Is it correct that we would like to review a loan before final approval?
Yeah, that'd be part of the reporting on the loans, just kind of understand the types of loans being issued, the types of businesses being served. Just kind of as a informational, just kind of keep us in the loop with the loans as they're being underwritten and reviewed.
I think that in situations where if an organization currently has a lending operation and the loan would be approved without city input, then there wouldn't be issues there with the city having to review and approve a loan. I think the city's review would be more geared toward those risky type loans. And, that's where I think the business coaching comes in. What would satisfy the lender's requirements for approving a loan, understanding that the city is providing resources that would reduce the risk associated with the loan. But I think if you have a slam dunk loan and the opportunity fund applicant is meeting the requirements, they're open to the coaching, whether that's biweekly reviews or just meetings. I don't think that the city would feel any need to be involved in the issuance of that type of loan.
Another question came in: are loans for a single purpose or a mix of purposes? They can be for a mix. The needs of these small businesses can be pretty diverse at times, and even our revolving loan program, we typically mix maybe some working capital into a loan for equipment. If it just kind of depends on the specific request being made. But short answer, yeah, it can be for a mix of purposes. Another question: exclusively term loans, or can they be lines of credit? Well, I would put that into the RFP. If you can put together a structure that makes sense and it does incorporate lines of credit, then I would say, please submit the proposal for that. I think that the original kind of vision was for term loans, but I mean, there is definitely a need for lines of credit out there, and if a proposal can be put together that kind of shows how that they would operate, I would say that's acceptable. Of course, in those cases, then kind of the loan loss reserve or the amount dedicated to offsetting the risk on those will be a little more variable. So you'll need to go into a little more depth in the RFP and the proposal submitted.
These are great questions. Please keep them coming. Another question for you, Mark. Minimum credit requirements, credit score?
Yeah, no minimum credit requirements for no credit score. If you end up pulling a credit score as part of the submission, I mean, that's fine. If you opt to not pull a credit score, that is also fine. Just kind of explain the thought process behind either decision and the proposal submitted. One thing that we really try to do with our revolving loan program is we do pull credit reports, but we really try to dive into the logic behind the score. If it's like a one-time event or what type of debt is being reflected. We don't have like a minimum score requirement for our revolving loan program. We just try to have a basic understanding of kind of the background information there.
Yeah, we recognize that many small businesses, particularly startups, would have challenges associated with credit. So, getting to the foundation of this program is providing access for those types of businesses. So as Mark had mentioned, the revolving loan programs that the city runs, we do try to work around some of those barriers, recognizing, a bankruptcy or a lien, what are the details surrounding that? What are the reasons for, there's issues there that these small businesses are dealing with, that, might not be apparent. So, part of getting through this challenge and working, ultimately for businesses based in our city is, understanding the challenges that they actually are dealing with. Sole proprietorship's eligible.
Yeah. Oh, yeah.
Yes. Yep. Yep. We appreciate all of the great questions, believe me.
Yeah, loving the feedback today.
Yeah, I mean, part of the objective of the webinar is to provide comfort to interested organizations. We really want to encourage responses to the RFP, and recognizing that the RFP is very thorough and had significant information in it. We wanted to make sure that organizations were left with some comfort that, the city is willing to work with you. Questions that you might have in terms of, unclear how a certain element of a program might be administered, those are areas that you can discuss in the RFP. And the city would ultimately work with whatever partner is chosen, on the details of the program.
Yeah, to follow up on that, the RFP, I mean, it is very thorough, but we also built a lot of flexibility into it because we wanted to hear back from you how the kind of see the different proposals that would come back to us, because we understand there's not any real one, stop shop or one size fits all. There's a multitude of approaches to different loans, different types of businesses out there. So we wanted to kind of allow for flexibility from the respondents to kind of show us how they would address that.
Will the city be able to assist with bilingual marketing? Yes, we can definitely do that. We can do it in-house, or we work with an outside organization on translation services.
So are the opportunity loans eligible for admin costs, such as overseeing a potential partnership? So you mean admin costs on the servicing side, and or do you mean on the to be issued out for? Okay. Yes. So funds from the opportunity fund can be used to cover costs for running the program, but it's expected that those be kind of broken out in the proposal.
So far, we've only lost one participant, so I'm guessing that we're answering questions that everyone has interest in. So, please keep asking.
Yeah, thank you, Marty. And of course, we'll pull that together in the FAQs for after this webinar. Alicia Young has a question. Business coaching can be virtual. Yes.
I think
go ahead, Eric, if you
I was going to say, I think it's where appropriate for the business. Oftentimes we have businesses who, virtual business coaching might not be the best method. So in those cases, we would encourage the partners to meet one-on-one. And as I mentioned, if this is a challenge for an organization, if you are not located in South Bend and you don't currently do business coaching in South Bend, please reach out to us, because we have resources that we can connect you with that can provide that one-on-one. But going back to the comments in terms of meeting the businesses where they are, if a virtual meeting is appropriate and the business is finding value through that coaching, then yes, that would be appropriate. The whole purpose is, what we want to make sure that the businesses are finding the value. Oftentimes, as you can imagine, they'll go through programs and they won't find value. And this is one of those cases where, if we have, an underserved community, we want to make sure that the business coaching that residents are receiving are actually benefiting that community. But we are happy to work with him. Can you give it another 30 seconds or so?
Well, I think with that, it seems like we've gotten the questions that you have today. If you do have additional questions, please follow up with our team. We would add those to the FAQ that we will send out to everyone who's in attendance today. If there's anyone else from your organization that you'd like to have included on that FAQ mailing, please let us know. But want to thank you all for your interest today, your time. As mentioned, we will post a recording of this webinar on the City of South Bend website this afternoon. And so I think we can also, do we plan to send that out in an email as well, everyone? We can do that. So just want to thank you all again for your interest. We're looking forward to some exciting proposals. And please note, if you were needing to seek a partner, either the business coaching or the lending side, you would need to respond to us and let us know that by the end of this week, so that we could help facilitate some of those connections. But other than that, we're looking forward to seeing the proposals, and thank you all for your time today. Appreciate it.